Work Together 16.2 has two different parts. First, we're going to analyze the statement of stockholders' equity, and then we'll prepare the statement. This may be a little bit challenging, this first part, since we haven't actually prepared the statement, but we'll go through it and see what we come up with. It says the statement of stockholders' equity has two major sections, capital stock and retained earnings. And again, I'll just pull up the example that we used in our PowerPoint on the right over here. And you'll see that you have the two sections. Okay, the first question, it says the amounts for the capital stock sections are obtained from which source? Okay, so we have our capital stock that's up on the top. Where are we going to get the information? Where are we going to get the information from? Our par value, our shares issued, our during the fiscal period. We would get that from our general ledger because we need to have our dividends account. Okay, the amounts for the retained earnings section, the one on the right, you can see that you need your net income after federal income tax, you need the balance of your retained earnings, and so forth. So if you think about it, that information is going to come from two sources, our adjusted trial balance and our income statement. Because again, remember we need, if you look in there, our net income from federal income tax comes from our income statement, and then we need some other balances from our adjusted trial balance. The third one, which of the following will increase retained earnings? We have issue of stock, net income, net loss, par value, or dividends declared. And that should be our net income. On to part 2 of Work Together 16.2. We're going to prepare an income statement. You can see at the top here we have the adjusted trial balance, and then we have a tab for our income statement, and we'll be using those two items to prepare the trial balance down below. It says use the trial balance and income statement for Superior Corporation. Prepare a statement of stockholders' equity for the current year. As of January 1st, Superior Corporation issued 8,000 shares of stock with a par value of $10 per share. During the fiscal period, the corporation issued 250 additional shares of capital stock. All right, so the first line we're going to do is the name of the business. Superior Corporation, and we are preparing a statement of stockholders' equity. And it is for a fiscal period, so it's for year ended December 31st. Okay, so I'm going to hit the pin here. That'll help me. Okay, the first section here is capital stock. And then our second section down here is retained earnings. So we're going to figure out those two. Remember, capital stock is a total amount of stock that we have issued. Okay, the par value, according to our instructions up here, our par value is $10 per share. On January 1st, we issued 8,000 shares, it says right there. The total value, we take 8,000 shares times $10 per share, and we have $80,000. During the year, we issued, it says right up here, 250 shares. 250 shares times $10 is $2,500. Our balance at the end of the fiscal period is a total of 8,000 plus 250 is 8,250 shares. The total of those two numbers is $82,500. Okay, so our capital stock, our stock is worth $82,500. The next section is our retained earnings. Remember, retained earnings is the amount of net income before dividends have been declared. So our balance of our retained earning on January 1st is, and we're going to scroll up here, we need to go to our adjusted trial balance. And we'll zoom in here and we'll go down to our retained earnings. And you can see that retained earnings on January 1st is right here, $15,283.40. Next, we're going to do our net income after federal income tax. Okay, so now we have to go up to our income statement, go down to where it says net income after federal income tax. It's right there. $73,148.80. Then if we declare dividends, we have to subtract that from our balance because we are paying our stockholders. So now we need to go up and figure out what our dividends are. So we'll jump back to our adjusted trial balance, find our dividends, and we can see right up here we declared $12,000 in dividends. Okay, so we'll put $12,000 there. Okay, it says net income after federal income less, so we're going to subtract those two, this minus that, and we come up with $61,148.80. And that will be a net increase because we didn't declare more dividends than our net income, which we wouldn't. The balance at the end of the fiscal period Okay, we're going to take our balance at the beginning plus our net increase in capital or stockholders' equity. We'll add those two together and we come up with $76,432.20. Stockholders' equity, December. Okay, we're going to take our capital stock plus our retained earnings, and we will come up with $158,932.20. And if I put all the right numbers in, they should all have check marks. So let's double check. And that is it.